Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, September 13th, the year 2018. Let's talk trading. Price analysis 2. I realized I left off a chart yesterday, a frequency distribution for the range. So you can see here, for some reason I have the last 183 days. Not sure why, but about 47% of the time, we've got a range over 100. And you see here, we don't have a range under 30. So if you think about this, what does this tell you? I'm trying to find, where do I have the buy zone? Too bad we can't label these right here. We have the buy zone. So the distance between here and here is 20 pips because it's the open plus 10, the open minus 10. That's 20 pips. You cannot fit a 30 pip candle in a 20 pip range. That's why the buy zone works. Price has to leave this area. It just won't stay in there. It might stay in there for a while, but eventually it leaves. So that's how the buy zone developed. And, just for the record, I figured that out when I was trading stocks. But as you can see, it also works with the foreign exchange. Now, somebody was saying they wanted to see this for the GBP. But just remember, no matter what you trade, you need money and risk management. That's part of how you trade it. So they wanted to look at the British pound. I guess they wanted to see the frequency distributions. Now, it might take some time to load up the pound data because I usually don't trade the pound. But I want to do something here just to make things kind of easier. What did I do? Range, period. My bars, 100. Okay. So on the pound, there's no ranges under 40. So you can't fit 40 into 20. It's going to stick out of the box. And we're looking at the daily here. Okay. So there's the frequency distribution of the range. 39% of the time it's over 100. And now we look here at the breakout. And you can see here we had a breakout at the previous. This is the previous day's level, this dot, and the diamond shows a breakout. So at the moment, where are we? Well, let's see. We had an actual, we could have made about 40 pips on the breakout. So you see here about 13% of the time. So about 20% of the time, it's going to be less than 10. 80% of the time, it's going to be greater than 10. That's not bad. 4 out of 5, you're going to get 10 pips if you hit that trigger. That's not bad odds. And you can see here on the low side, about the same. 17% of the time, it's going to be under 10. So about 83% of the time, it's going to be over 10. Once again, you get some small breakouts here, here, here. But you also get some larger breakouts. I mean, there's a huge one. There's another nice breakout there. And looking here at the high minus open, open minus low. Once again, this works along with the buy zone. So you can see here when it breaks, when it hits 10, you got about a 20% chance of of it hitting the buy zone and exceeding it. So if you get to 20, you see 24, that's about 76. So 7 out of 10 times, you should be able to hit 20 pips or more going to the upside. Now on this heading downwards, you get triggered here. So that's what, 29, so that's 71% based on statistics, where you're going to get 20 or more for the open to low. Once again, not bad. Finally, on the rat zone, which was the pound, was where I made this observation. And once again, you can see some of these really nice wicks here, especially past couple of days. You can see here 26, so that's 74% chance. Right here, 20 or more pips, and here 17, so that's what, 83% chance of it being 20 or more. So that is why the rat zone works. So I hope that helps. Let's see, where were we? Once again, risk management. So we can look at the monthly, but let's go back to the euro yen, since that's what we're focusing on really this month. And you can see here, we broke slightly into the upper wick zone on the month. You see here, we broke out of the previous week's high, right now 73. So anybody trading the wick zone on the weekly was rewarded quite nicely. On the daily, if you took that breakout, there's a 90 pipper right there. And the range, 1, 2, 3, 4, 5, 6, 7, 8, 9 over 100, 156 versus 76 on the dollar yen. Once again, the reason why the switch this month. See, this is why, or one of the reasons why I like to do the statistical analysis. When you see a range going down like this, so let's just go ahead and look at the dollar yen. So you can see here the range. I mean, only 10 above 100. I mean, it's anemic. You can see here it's right between 40 and 80. And that's where it's spending most of its time. Just wasn't paying off as it used to. So that's part of trading what you see. You might see something, then you can use statistics to confirm what you see. It's not that hard. Once again, we saw the buy zone, boom, right? And a couple of maybe opportunities to try it again. Rat zone, prepare for a short. And the pivot, I believe we took out the pivot. I'll have to look at the next chart. Yes, we took out the pivot. You still have 2 missed pivots right here. Who knows, it might take out this missed pivot. The one from May. Price action. We haven't had a red at the line yet. See, 1 ball, green at the line, 1 ball, green at the line, 1 ball, red at the line. Somebody said that they're liking this. I'm glad it's working for you. You can see here once again hit that previous day's high and like a rocket. Now, if you're wondering, I don't know if the shading here, this is current day and the previous day. Once again, wick zone. Price doesn't like staying in the wick zone. And there it goes. Holo zone. We're setting up for a holo right now. So keep your eyes on it. Inventory reduction bar. There you go. Grab a handful of pips on that long. On that long. We put in a short. We put in a couple of more long triggers. So we'll just have to wait. And the previous daily, weekly, monthly, open, high, low. Once again, you can see here we took out the daily, previous day, previous week. And there's the previous month's open right there. Not much price action really happening here. And on the Einstein line, once again, not that much. Now, I've had the computer open more than 3 minutes, but every time I change the chart, the Einstein line reset itself. And as you can see, it looks like we just had a buy trigger there based on the Einstein line. And you just watch it for a couple of minutes here. And you see it turn back to selling because the ask price dropped below the highest bid price. So now, as the ask price is dropping, the bid's going to have to get above that for buying to start back. It's really a simple concept, but I find it really helps timing when you're looking at your entries. It doesn't matter what method you're using. If you just wait for the bid to get above the ask peak or ask valley and the bid, and then the ask to get below the bid peak, you find yourself usually not experiencing too much drawdown when you first entered a trade. I mean, because I just know how many times in the past before I came up with this, I'd enter a trade, maybe I buy, and then I just see the price dropping. And then once you start using this, you'll get a feel. It's like, after so much buying, something's going to give. It's like it just kind of runs out of gas. So you see right here, we've got a short trigger happening. But you'd be going against H1, the M30, the H4, daily, weekly, and monthly candles here. So you may or may not want to take that short. Just depends on what your method tells you. So, fellow traders, I hope that helped. Just remember, it's not what you trade, it's how you trade it. So, we've got 2 days left this week. Let's just continue the draining of the banks.